good day, all. Ira Epstein, and here we are with your Spider ETF stock market wrap-up for Tuesday, and this is the 9th of January, 2024. A week from today, at 12:30 p.m. Central Time, I'm going to hold my first live webinar of the year. It will fill. It's a guarantee it will fill. All right. If you're on my mailing list, you will get an email from me probably tomorrow. Take your spot and away you go. It is not recorded for you to visit. You either come to it or you don't. In the email, once you get to the website and you fill out the form, because you have to register for this, you'll be sent your password because it is password protected. And there's an area in that email that contains that where you can write me questions of any markets you want me to cover. And I'll cover the spiders, the ETFs, the stocks, and the futures markets. So if you write them early, I get to them. The videos, rather the webinar, typically is 20 minutes long. So I start 12:30, I end 10 to 1, and that's because it's people's lunch hours, it's short, doesn't take you away from your business and or whatever else you're doing, okay? All right. So today there was a hack, believe it or not, a hack of the SEC, their Twitter account. And somebody went in there and said that ETFs had been approved. And with that, the ETFs moved on them. And then the SEC discovered it, took the erroneous message off. And then as fast as they went up, they went cracking back down. But the interesting thing is they didn't rally as much as I think traders thought. When that came out, I would have thought you'd go up $4,000 or $5,000 at least. The market went up barely $1,000 from where it was. When the news came out that it was false, it gave up a lot more. It fell much further, and then it came back. But interesting, is it a tip-off that even if it's approved, you're not going to get the monster jump that the filers, that's the word I want to use, of all these ETFs that hope they get approved, think it's going to be. I mean, I don't know if you're watching the TV stations. They're just rolling these guys out one on top of the other. CPI, PPI, we're going to get that come Thursday and Friday. Now, I happen to think they're not going to be as weak as people think. But no matter what I think, they'll put a spin on it. The market gets these analysts that want to say, yes, it's a stronger report, blah, blah. But if you look deep in it, you can see the weakening. It's like the labor reports that came out, employment reports just last week. Everybody's telling me how weak this is going to be. It's sort of like the U.S. consumer. He's spent out. Okay, yesterday, if you looked at the number for November, instead of a $9 billion increase in debt that they're putting on credit cards, they did $23 billion. I don't know what number spends that guy out. There's got to be a number. I agree with that. And at 20% plus interest rates on credit cards, it's probably sooner rather than later. But we've been saying that for a long time. And that person just doesn't stop. And what are they doing with that money on cards? Well, they're buying goods. So if they're buying goods, why do you want to think CPI and PPI are going to be big, bad numbers and it's going to create the Fed going for a March number? Here's my answer to you. Nonsense. I could be wrong on it, but then where's all that money on that credit card going? Because if they're buying the goods, think about it, November, December, the Christmas buying, they're buying all those goods. CPI is going to fall when you're spending your money? It's the opposite. If you can't clear the merchandise in the stores that are carrying this, then you get the sales, the distress sales. That starts taking prices down. It's older merchandise. The stores don't do that well until they clear it all out. That doesn't seem to be what this is saying. I'm probably wrong, but that's what I think we're going to be dealing with. So right now, where are you? I want you to listen. And it's not a hip-hop song. It is called Marking Time. It is not Marky Mark. It is marking time. You are doing this in the marketplace as everybody's waiting to see these reports because the big bets are in place. Is or is not the Fed going to make a cut in March? After that, I don't give a darn. We know they're going to cut at some point this year because unless the data gets a lot stronger. You do realize there's several Fed members that keep saying they're still open to a rate hike if that happens. And I don't know, the data's still pretty strong, so anything can be there. Here is the Schwab Dividend Equity ETF. This explains it, so I want to stand back here so you can see what it measures. If you need to read it, hit pause on the video. Is that fair enough? Read it and away you go. You have a distribution in the chart. Look at how that congestion is taking place. You haven't seen that in a while. You have to go back over here. You had one congestion phase like it, a bit of one over here too. It can be up or down from there, but it's a congestion phase going on. Simply put, the market has got a pattern of higher lows and higher highs. Simply put, the market is over the 18-day average of closes, so the bias is up. When you're over the 18-day average, bias is up, under it, bias down. It filters the swing line, and the swing line is bullish. Now, there's another event that's happening. If you take a look, this average is climbing. Now it's 75.93, and it's gotten over the last break low of 75.87. If I come back a day or so, you see how now it's back under the 75.87. So it's forcing where the market could be bought by the pros as that number. And if they had a stop under the most recent low, it's not a lot of risk. And they could then say, well, where are we going? They'll look at the Bollinger Band, a lot of them. Why? Because 95% of the time the market stays within a band. Who wouldn't program their algorithm to say, okay, if that thing works 95% of the time to keep it in, it can be proven mathematically it does. Why wouldn't I say to myself, if I hit that number, I want to take something off the table? Didn't say everything, I said something. You got to learn how to take parts and hold parts. And it all has to do with, are you with an embedded reading or not? And you're not in this particular case, just to let you know. So trend up, bias up, but you're oversold as can be in the chart. That's a problem for it. Rivian. You're coming down into all the moving average of supports. The 100-day, you've now stayed under it for about 4 or 5 days. You haven't wanted to yet test, and you might well want to. The 1862 level, the 200-day average, along with the 1829. But as the market has slowly lost some value here, it's gotten very oversold and not even close to the embedding process at this point. In UGA, the gasoline fund, yesterday was the cover-all short area on the attack of the Bollinger Band. Again, the first time you hit it. Kaboom, and you get your bounce. I know you'll play, or you, I'm being facetious. I hope you understand that when I say you. I'm not pointing at you specifically, John or Mary or Don or whatever. But the average guy, this is it. It's going. The average guy doesn't know what he's doing. Boom. Look for resistance back to the 18-day average, but not one where I think you're going to get people going, I got CPI, PPI, I got an oversold market. Even if I come into that, maybe I should, stand back and see just what I'm dealing with through Friday morning. That's what I think is going to happen. XLF, overbought, back and forth action, and narrowing into the Bollinger Band. When you narrow in like that, you just think that the market's like a spring. It's winding itself up for a big move one way or the other. What's going to move it? I think I've given you the reasons and what it's going to be. Same with XLI, the industrial sector. You've pulled in narrow Bollinger Bands. You wait, you're oversold. I think the pros are all sitting doing this with their thumbs. If I was better at it, I could do it very nicely. But that's what I think they're doing. AMC, I laugh when people are telling me Wonka is the big producer of revenue at this time of the year. It can't be good. It cannot be good. Even if it is good, the kids aren't going to the show school nights. There's no revenue. Big problem right now. It'll come. The lower they go now, I'd love to see it get down to $4 or so, and then you get the better movies. You got a shot for the stock to go up nicely. All right, it needs to get everybody worn out. This is not a good play. It's a trading stock. I like that a lot. And it's low priced, which I like a lot too. And I know this game, so I like that a lot. In RSPD, in the consumer discretionary, you have lower highs, lower lows, and you can see how the market is just sort of fighting right here against that level. If you can close over the 18-day average of 47.12, I'd get a flip-flop. I would suddenly turn actually quite bullish, looking for the market to challenge the Bollinger Band on the upside. So that's an interesting one for a change. I don't see anything in XHB. You know, I don't think the home builders are going down very much for all the reasons we know. Everybody wants to buy a home, all right? There's pent-up demand galore. And these are home builders. They're not building spec homes. They're waiting for you to come in their door. They'll work with you. They'll show you how you can buy down mortgages, get it a bit cheaper than it is. You got a lead time of about a year. They'll show you how you commit. And they're dying to work with you because it's not as though the market's full of people walking into home builder offices and say, let's go, Harry, let's go. They're scared about these mortgages. So it's good. But there's that demand. And here we are. We're in January. 8 more weeks. And the home builders at the end of March are comfortable. They're going, okay, April in the Midwest, I can work there. My guys can put in the foundations, the pads, whatever it takes. And out south, it's already going already. And by the way, it took 2 years for my brother-in-law and sister-in-law to get permits. In Florida, finally, their pad is down and their home is going. Can you believe 2 years? I warned them. I said, you work with builders in Florida, it's like nothing you've ever experienced. I know because I did it. It's hell, to put it mildly. In XLE, what you've done is you've gone from the high to the low. Wow, back and forth in the energy sector. Now, tonight, as I said, the Houthis attacked another, I don't know if it's a ship, a group of ships, exactly what happened. The news was breaking and I came here to do this. But they're going to keep doing this until there's reason for them not. So either Iran, if they'll listen to Iran, tells them, you stop it, we're trying to make a peace thing here, or if the coalition can't get Israel to agree to something and this keeps going, you're testing everybody. There's a lot of money at work in the region, and it's a lot of cool heads. You got to thank that coalition for having a cool head, because to a man, these are military people. Do you think they want to be cool-headed? Do you not think they want to use everything on those ships and launch it at these groups? If you don't, what do you think they're in the military for? GLD, lower highs, lower lows. You can see how the market's oversold. It's that sideways action. A lot of false moves in sideways action. Let the market come out of here. I still like gold a lot because I think inflation is going to be one stubborn creature. People spend too much. They still have too much money. Did you look today at Bloomberg? They cannot fill policeman jobs in San Francisco. I studied it before I did this. 112,500. You just heard what I said. They can't fill the jobs. People aren't applying. New York City is 58,500 for someone to start. Now, Lewis and I, my IT person here, we were sitting here talking, and Lewis's first thing was, well, you know, there's a lot of inflation there. Do you think it costs and has higher inflation in San Francisco than New York? I don't. Number two, 58,800, a starting police person job in Chicago, 112,500. California's crazy. I don't know how to say it any other way. I think it's wacko land. I think, by the way, my son lives there. So you can't say I'm against all Californians. I'm madly in love with my son. But it's nuts. And even he laughs. He goes, it's just nuts. All right. In the silver market, lower highs. My uncle lives there. I have a lot of family there. Market just sitting sort of right in here. Okay. In the copper market, well, this is all about China. This is about, and it really is about PPI, CPI numbers that are coming out. How's the economy looking? And it's certainly about, are interest rates going to drop? Because once they do, the race is on. Germany's dying to see it. They are not, their economy is faltering everywhere you look at it. When Spain, when Italy, when the UK are doing better than Germany, there's something not right. So interest rates are going to be very important. Everybody's looking at it. And when they come down, copper's going to come alive. That's my prediction. BND, well, this TLT, why would anybody go into the CPI and PPI? And in the dollar, you lost the embedded reading. You know, I thought that I had bad quotes. Honestly, when I saw it jump this much yesterday, and I told traders, I said, when I see that, I checked everything, it's real. Said, I don't know. You lost the embedded reading. I can't be bearish anymore. I don't know where the market's going. And as you could see, well, the market is trying. Now, let me show you. It's trying to come up. Today, it was up another 9 cents. Is it going to get to the 18-day average? It could. I don't fight the chart. The chart's never wrong. I'm wrong. FXE, in a downtrend, oversold as can be. I'll let the next guy want to be the hero there. So you get these outside days on these charts. What do you do with them? What do they mean? Because you get them all the time. How do you play them? Well, I created a video course for you that's 9 chapters long. It's easy enough. You can knock it off on a Saturday morning. You will get it, all right? It comes with my charting software, the data, and then to prove the point, each morning for 2 weeks, you get access to all of my research. And as we see the outside days, I bring you in with them, show you how they're working, how I'm viewing it, why I'm viewing it the way it is, and you can take it. A chart's a chart, so it's on stocks, futures, ETFs. I cover it on all of them. It's a very, very common pattern. So you get all this, you can learn something, and isn't that what it's about? It's not about what I know here. It's about how do I teach you what I know so you can apply it in a manner that's comfortable for you. IraEpstein.com under the word education, outside day course. Give a click here, and I'm Ira. I will see you tomorrow.